The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And we're looking at, on this 25th day of March, wrapping up this week, March is gone. Can you believe it? Anyway, so we're looking, I said to subscribe to my opening call for the E-mini. I usually show the E-mini every day. Showed here in the den as well, that above 28.15, the resistance between 28.09 and 28.15 is very strong. Today's high is 28.18, and we'll see what happens, because if there is a move into the 28.22 area later today or tomorrow, that's going to say counter and bounce after that massive decline on Friday, exacerbated by many fundamentals. But look what's happened here. A very nice bounce in the E-mini from the low today of 27.90 up to the 28.18. Now it's kind of trading in a sideways pattern, trying to decipher whether it's going to go higher or lower. At this point, those are the parameters to watch. A near term, oh, I should have shown you right here. Above 28.12 for 2 5-minute bars, in other words, for 10 minutes, but let's call it 2 5-minute bars, would suggest now that you can go to the 28.12, then maybe retest the 28.15 level. But if there is a break under 2800 and it starts for 2 bars to go to 27.98, I'd say that's a big problem for the day. Okay, here we go. IYT, it's very interesting that there are, if you look at the transportation index making its all-time high with a Chapman wave 2-bar reversal the week of going into the end of October at 209.44 and then 209.33 the following week, 11 cents lower, and then pulling back all the way minus 25% to the 155 area? I think it was. Let me just double check. I should have typed that in. 155.24 the week of the 28th. And if you can think of it this way, 155.24, 12, 28, 18. If you can think of it this way, that the rebound back to the 191.5 area, that looked very much like it was a 50% rally and a retracement, and that it could go even higher. But then all of a sudden it stalled. What's happened since then is that there's been 4 or 5 weeks of low, I can't say lower lows, but they've been low lows, but they've been retesting the lows, but lower highs. The MACD has actually held quite well, although it's much lower than it was back at that all-time high back in September. But this is what's really important, is that the stochastic's holding at 73% in the weekly chart, and that's good. If you look at the daily chart, you'll see the MACD is really slumped. It's gone from up in the 90, I suspect that was about 93, 95%. Now it's trading, shouldn't have said that. I meant that the stochastic was up in the 95% way back when it was making its most recent high at 192.27 and had gone all the way to the, was that the single digits or was it just teens? I think it was the single digits. Yes, 8.35. It goes all the way to 8.35 around about the 9th of March, has a nice rebound, makes the arch formation, takes out the left side low today, not Friday, but today, holding above it right now. The MACD is higher than it was back on that low that was made on the 8th of March at 180.45, and here it is at 180.86, having gone to 180.06 this morning. Leg C, leg C to the downside. MACD is still very negative, and that's saying to me that the high that was made, I should get the exact date here. The last one was the 19th of February, but that one was, yeah, it was September the 14th. I remember that now. I'm going to just add that. I don't want to have to keep looking at it. So this is 9, 14, 18. All right. So what we have is from that Chapman wave 2-bar reversal back in mid-September, it's gone down very sharply to 155. I mean, let's face it, a 54-point decline. Is it 1/3? 20, actually, it was more than 25%. I don't think I updated that, but let's call it 25% for now. And then it rallies very sharply. Now it's come back a bit, but considering what's going on, this is still pretty darn good action. So I'm suspecting that we're very close to some kind of a bounce. Boeing is not. Is Boeing part of the transportation index? It should be as part of, obviously, airline. Boeing is up 3.91 right now. It did go to a lower low on Friday, goes to a leg D to the downside, just above the 200-period exponential moving average. Trying to rally off this, if they've started a fix, we might find that until they come out with the multiplication of the 357 or whatever it is, maybe 700 lawsuits, plus the countries with the planes, we might find that Boeing has a bit of a bounce. And it bounces from here to about the 375 level, maybe even 383, the 9 and 14-period moving average. It doesn't break up above the $400 level where it had gapped down from 418 down to 400, something like that, back in early March. So, but it could have a bounce. A relief rally, let's put it that way. That weekly chart is suggesting that Boeing might be in for a little bit more of a time lapse before it can come back, and we're going to be watching that closely. How low it goes is going to be the issue, because let's face it, an incredible 446 down to Friday's low in the 360, was it 360 or 350 area? 361.53. That is really a big move on the downside for Boeing. But we'll see what happens, because Boeing is important. It is affecting the Dow price. So let's go to a couple of things here. Semiconductor index had a spectacular Thursday. It had a pretty lousy Friday. Thursday goes to 110.60. There's an inside ugly red candle bar, but it had such a massive move. That was the Broadcom spike, I think it was, or was it MU? Yes, it was MU. Micron, huge spike on Thursday, big pullback on Friday. It went to a low on Friday, lower than the previous cap-up bar of Thursday. The SMHs didn't. Now it's going back even further down, $1.15 at 40.47. I'm hearing news, current, this is right now, this is current news, that they are laying off in the semiconductor field. The fabs are starting to lay off people. Maybe it's not huge numbers right now, and they have definitely seen a big drawdown in orders. But I'm suspecting that it is a combination of the lower projection of earnings over the last couple of weeks into the last month, that really helps some of these stocks spiral higher, like Micron. And at the same time, I wouldn't be surprised if they've had 6 months in which to work out their cost cutting, and that might have impacted them a little bit positively. So how this works out to get to the median point, I'm not sure how it's going to work. My suspicion is the SMHs go lower, and then we start to see orders start to come in by about maybe June. I'll be right back. Basil Chapman does it.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, just a quick thing. I believe it's at 1 o'clock. Apple comes out with their new service announcement. 197.67 on the 21st, trading now at 190. It's going to be interesting because the weekly chart is quite good. The daily chart is kind of looking a little toppy here. Make it simple. It's at 190.50. A close in the next 3 days under the low of today, which was at 187, would imply 185. The 14-period moving average has to be tested. And a move, it really is no good, even just bouncing to the 193 area, 3 points higher. It has to break to a new all-time, a new recovery high above 197. Was that 67? 197.69, sorry, 2 cents off. It has to start trading above that level because the daily is looking a little bit toppy, just a little bit toppy right now. So if it can trade into the 193s, hold steady, and then just move steady for the rest of the week in a cup formation, that'll be good. I had a question about Amarin, Amarin. I'm almost sure it's a biotech. I haven't looked at it for ages, but it has some crazy movements. That's why I did notate it. If it's still notated, Freeman wanted to know, what's the question? You've got the question. Basil, how are you? Yep, I'm pretty good. Thank you very much. Please, could you take a look at Emerald on the show? I took a starter position this morning at $17.35. Thanks, Freeman. Freeman, nice to hear from you. I hope you're doing well. Amarin is trading at 17.64 right now. It's up 13 cents. So I haven't done anything yet for a while. A, B, C, the last time was in February, so this is C. Okay, so the daily chart, this is Amarin Corp, PLC, Biopharma. I think they're in the cardio area, heart, omega-3 fatty acid. I think that's what they're trying to deal with. There was a Chapman wave start, then a restart and a second restart, finally goes to CDEFG, and it did it and this was fascinating to me at the time, it did it in this kind of a left side, right side price time movement, cup formation. Now it's pulling back. I wonder, I never ever finished this, so let me just do that now. I'm going to take it, new parallel, take it here. So you start a position. Now, I don't know, Freeman, I can't recall. I do know that you're quite prepared to take stops a little, if I recall, a little bit wider certainly than I do, because you like to get into a position and then you like to add to it. So let me just say, okay, good. So we've got a left side, right side price time match that says if it even goes just a little bit lower, the low today was 17.26, and you got in at 17.35, just off the low, but it's nicely up now. It's up 17.68. I'm a little concerned looking at it now. The MACD is still negative. Stochastic is flat at 7%. That, to me, it needs a big move quickly. It needs to get over Friday's ugly candle and get into the 19.37 level or higher to really rid itself of this flat stochastic. So here's what I'm looking at. If you've got your first position, I don't know if you intended to scale in, or this is a starter position which you only wanted to add to if it was rallying. So I'm going to do some guessing here. I'm going to say that's your starter position, that you probably have a stop below your 17.36 entry. So let's just say your stop is two stops. One is maybe you've got a stop of $1, or maybe you've got a tighter stop because you're expecting if it goes higher, then you'd add to it. So I'm saying let's deal with both of them. Imagining, I don't know, but just imagine. If you got a $1 stop, I'd actually get kind of nervous if it closed under 17. You got in at 17.36. The low was 17.26. Oh, man. If it closed today after whatever's happened today, I'm suspecting there should be a rebound, just a relief rally. But if that doesn't impact Amarin and AMRN trading at 17.69, up 18 cents, suddenly gives back a little bit. I don't think it's going to the day's low, but let's just imagine it gives back some. That's fine. Today, I would have a stop about 20 cents under the low. So that would be 17.06. So that's a 30-cent stop. 2% on your position, less than 2% on your starter position. If nothing happens, everything looks great, and by the end of the day, you're trading at 17.85 or higher, then the next step would be, I would still give it a day or two. This candle is not a good candle, the one from Friday. And then the way I would add to it would be if I start to see the stochastic improving from 7.35%, preferably going to 8% as the price moves up. I say that's a good start. Then I would add another position, probably 36 is where you go. Excuse me. Hey. Okay. Getting it back. Not sure what happened. All right. You see this little double top in the weekly chart, peak C, and it's almost like a peak C1. It goes to a high of 23.34 around about October, early September. And then in March, last week, no, 3 weeks ago, it goes to 23.25. Just 9 cents away, but that looks to me like, look at the MACD and stochastic. That looks to me like a peak C1, peak C2. The monthly chart had a peak E back in somewhere around January of 2018, around about 460. Pulls back quite sharply to the most recent lows. And that was a low of $2.07. Am I correct? This is it. I remember this is a crazy stock. I don't know what's going on. It was trading at $2 at the end of, towards the end of last year, and then it had this huge spike. It wasn't a takeover. They must have had a drug that really worked. It gaps up to 951. That same week, it goes to 16.34, and then it screams to the 23.30. Now I remember. This is coming all back to me. And the weekly chart says double top potential. The monthly top says, well, it looks like a double top, but it's holding very well. This is what I'm going to recommend. I don't know what's going on. So I'm looking at this and I'm saying, let's give it the same parameters that I was looking at a moment ago, because as long as there's a story, I'm happy about that. Looks like the story faded from 23 down to the 17 area. Let's see if it can come back again. I know that you got your eyes. Now I know that you got your eyes on this because it's a prize. If maybe they had an FDA approval or something like that. However, I don't want it to give back more. In fact, I'm now changing my parameters just a little bit. I'm sticking with just the one that if it goes underneath 17.26 in the next day or two, I'm just going to say, give it a little time. I'd much rather be buying strength than weakness. That's all I'm going to say. Now I recall that craziness. That I forgot to look. It was down in the twos just, 6 months ago or something? 7 months? This is crazy. This is typical of a biotech that's on a roll. So let's hope it's still on a roll. If it starts to trade at 1768 right now, by Tuesday, it hasn't given everything back. In fact, it's gone over today's high of 18.18 exact. If it's trading at 18.15, I like that. Would I add a second position? With your first position, I'd raise the stop so that no matter what, unless it gaps down, you've got yourself a profit. And maybe in 2 days' time, we'll look at it again and see maybe you can add to it for a bounce, because now I can see there is a story attached to it. Whoa, what a suck. Hey, good eye, Freeman, and good luck with the trade. Let me know how it's going. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so let's just run this quickly. I had a whole bunch of questions in the den on the email. See here we got gold, and I believe that you're not talking about gold, the metal, you're talking about gold, the stock. That is Barrick Gold. That's the new name. A, B, and this is leg C to the upside. Wow, this is a really good chart, good-looking chart. So let me just do this. The weekly chart buy mode goes to an A, then it goes to a B, then it restarts A and B. That goes to a C. So it's in leg C right now in the weekly chart, bumping up against that $14. I'd put it at 14, around about 14.20 resistance. It does look good. The weekly chart has gone to an A and then a B, but not yet a C. It needs $14.19 to get to a C. We saw that in the dollar, the same kind of pattern. Okay, let me just quickly do this here. We've got the daily chart. MACD is good. Stochastic's now at 81%. It wasn't before. That is nice. And these stocks have had really good, good moves and then a good pullback. Don't get the hiccups now. You've already almost sneezed. A, B, our leg C pulls back, starts a brand new A, B, oops, not a V, but a B, the C, and now you've got yourself a D. There's an overlapping wave, goes to a D, very nice. Very strong MACD. Stochastic's good at 81%, not great, but it's getting there. This is a good sign. I just want to squeeze this a little bit to see if I had a left side, right side price time match. I did. So now let me just do this here quickly. Gold, I'm going to the high that was made somewhere around December the 10th. I have to choose this candle right here. I don't know if that's going to work, but I'm choosing it anyway. That's the candle that I'm choosing for your left side plumb line right there. There it is. Oops, right there. And now let's go to the right side. Make it green. Click, view parallel, make it green. Let's see if it matches in time and price. Price is $14.18, I think. Oh, look at that, to the day. So $14.18 on the 10th of December. So that's 14.18, 12, 10, 18. And today's high is 14.17. And it's got another day to go to get that. It's also in leg D, so we're going to be watching this. This is a hard work to get to the double top. Let's see what happens over the next 3 days. If by Wednesday afternoon, Thursday morning, there's been a little pop to the upside, but in fact, it's only trading at 13.75. That'll say, yep, it keeps doing that. It has this push to the upside, and then it gives back quite a bit. Then a push to the upside, keeps doing that. Same as it keeps coming down and then rallies. It's in a trading band between 12.45 and 14.20. Let's even call it 14.25 for now. Let's see what happens. And that weekly chart has improved a lot. So that's your gold. I like it very much. I do believe that it's in a buy mode in the daily. It's in a buy mode in the weekly, even though the weekly is at 62% in the stochastic, and I really like 80%. The MACD is good. The price is acting well. I'm calling it a buy mode. I believe that it should not break underneath $13 and $13 to $13.10 to $12.90 over the next 3 weeks. So far, it's acting very well. Okay, gold. Next question was the dollar. But if you look at the dollar's in a trading band, down just 11 cents at 96.53. Look at these series of cup formations. It's trying it once again. The monthly chart is looking good. It actually looked a little bit like the gold. Isn't that interesting? That Barrick chart monthly, the dollar looks pretty much the same. However, what I am looking at is that if gold starts to trade under 95.50, that is a problem. That's not far to go. It's just a point. It can happen quickly in the dollar. So far, the dollar's acting very nicely. I like it. We still remain long. I'm hoping that we can go without any change in our positions, having taken just a little bit off from our buy back at 90.07 in the UUP. UUP was 23 something, but the dollar was 90.07. Hope we can keep that for a year. It'll be nice. We've often tried to keep stocks as long as possible, and this particular case, it is the ET. It is really a fund, the dollar index. We trade the UUP. So a question again about Nugget. Nugget is trading at, NUGT. Nugget is trading up 1.11 at 21.99, up 5.41%. Now, this is the pattern that I'm seeing as a familiar pattern in many of the gold stocks. So we've gone to a D. Look at this. Look at the GDX. Just gone to a D. Gone to an E in the weekly chart above the 200-period moving average. It's now up over the 200-period moving average. The MACD is still good. The stochastic's okay at 69, the weekly chart. But the daily keeps recycling to the upside. So this is a brand new leg C. The previous was a peak G/B. Calling this a C for now. In the daily, that's good action. Now keep your eye on the left side and the right and the middle. Daily, weekly. Here we go to Nugget, and then I'll get to some of the other questions. Nugget, look at this. Nugget is trying to emulate the same thing. Very nice action at 2203. It says 20.52 is the between 2050 and 2030. The 9 and 14 period exponential moving averages. The MACD is at 76 and rallying, but not great, but it's good. On balance volume is very strong because it's following the price movement of the last 4 days, and the stochastic has helped move the MACD up, and the MACD has crossed positive. I like this. I wouldn't be surprised if there's choppiness now in the dollar a little bit. I'm sorry, in gold, that there's a little bit more, and then there's some kind of a pullback, but we're building momentum. I think gold is starting to improve a lot as a harbinger of fear. I'm still going to go back to the XLF. Look at this XLF. That's the financials. As long as the financials of this weekly chart is still okay, the daily chart has made a complete U-turn. As long as the financials are under pressure, it says that gold could be a part of a harbinger of fear. And if I put it together with silver hasn't quite done it. Look, silver isn't there yet. Maybe it has since I looked at it. Oh, it's improved. Now it's up 16 cents at 15.57, trying to make a leg D above the high that was made 3 days ago at 15.865. So at 15.66, it makes this leg D. That weekly chart for the silver is still under a lot of pressure. Bob wanted to know, could I look at, I wrote it down somewhere. Bob wanted to look at Spot. Now, I don't know what Spot is. Oh, Spotify. That's right, Spotify. Spot is over here. SPOT is Spotify. Spotify technology. And I've never used it. As a professional musician, former professional musician, it's funny. I'm not into that. I have other ways of hearing music. But Spotify is fantastic. A lot of my friends have these huge portfolios with their Spotify. So Spotify is at 140.43, up $1.43, 1%. It made a peak just on the 19th or 20th. Let me just have a look what that was. We're right there on the 25th of February at 153.44, pulls back to the 135 area, rallies to the 146s, trading right now at 140. I think it needs a little time. So if you wanted to buy Spot right now, you could buy it, but it has to have a wider stop, because if it closes underneath the left side low of the 1st of March of 135.22, 5 points, I don't think I'd give it 5 points. So, all right, I'm not going to rush into this. I'll do a little work on Spotify, and we'll be right back. And another question about STZ, we'll look at that. Got a lot of questions coming in. Basil Chapman, Ben in Tallahassee calling to discuss the Dow.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So folks, just get used to this particular pattern. I'm just going to briefly talk about this just for a couple of seconds here, and then we're going to go to Ben because it's the pattern that we're going to be looking at. It's called the Chapman Wave dreaded H, the lowercase h pattern. That's the pattern we're seeing in Spotify, SPOT trading 140.50, up $1.50. Watch out if it closes under today's low of 140.50, it's going to go quite a bit lower. So this is a little bounce that's important. It could still make an H to an M pattern. I'd be a little cautious on Spotify right now. I think later on it's going to be a very good stock, but not right now. Ben, how are you?
Good, Basil. How are you doing?
I'm good, and you are looking at?
Yeah, so for the Dow Jones, couple questions. Are you looking at this as an opportunity to buy or to sell, given the pretty strong weekly chart? And I'm not looking at charts right now. Unfortunately, I'm in a parking lot, and I don't even know if the weekly is above the, or if the weekly is above the.
It's right on the 9.
Still?
The weekly is right on the 9-period green, 9-period moving average. In fact, it's a fraction under it. And the 14-period moving average in the weekly chart is at 25,286. I'm going to make it real simple so that you don't have to think about charts or anything. If the Dow trading at 25,430 right now starts to trade under, I'd prefer to say closes under, but I'll start off saying trades under 25,350 at any point in the next 2 days. That's going to be very negative. Watch then the 25,252 low of the 11th of March. That should be tested. If it's taken out, 24,993 will be my target. If there's a rally, and for subscribers, you know that today we missed by just a couple of points having a particular position on the Dow. But if it goes above 25,620, then look at 25,687 as the 9 and the 14-period moving average resistance areas. I don't think it's going much above that, and then I think it has to come back and do some testing. So I'm looking at this as this is the consolidation that I was expecting. I was expecting it perhaps after a leg D in the Dow above 26,109. On Thursday, we spiked up and we only went to 26,009. We just missed it. It's a pity because I wanted that D to be able to get that peak D rollover. In fact, we went to a peak C rollover. It's the H pattern. Make it real simple. Above 25,700, that's actually positive shorter term. It means it can bounce sideways. I think the upside's limited, but I'm suspecting under 25,680, it's going to reverse. And there's a good chance that even before then, if it gets to 25,350, we're in a sell. We're in a sell mode in the daily chart of the Dow, as I said to subscribers over the weekend. We're going to be watching this, and the MACD was the big issue for me on Friday. I say the MACD just has to cross positive. If it deflects lower, that's not going to be good action. Well, of course, it got repelled. So I don't like this action right now. I think we're in the consolidation. And the weekly chart is good.
Does the monthly chart do anything for you?
I'm sorry, what?
Does the monthly chart give you any indication of
no, at this particular point, it's above the 9-period moving average, which is at 25,117, and the 14 is at 24,777. I'm suspecting that at some point in this particular move, we'll probably be testing the 25,000s, and we'll go from there. But I think the upside's limited. And just for now, I think we've got to be looking at lower highs and lower lows. That's the phase we're in.
Maybe this would be the potential start of the leg A for the monthly then, I guess, right? Or peak A, I guess?
The peak A, yes. I would not be surprised if by March we've made a peak A, a gray peak A, we pull back, and now that's the next pullback is going to be a big one for me. That's why I've got my webinar Wednesday week. It's going to be anything goes. Right. It's going to be talking about exact parameters, what we're looking for, why the XLF is a bit of a worry here, what we're looking for, why I want to look at the broker area. I want to be looking at certain sectors, not right this moment, but coming up soon over the next few weeks. And it's going to be a very important period. We'll see how the market handles it.
Good. Very good. Basil, thank you very much.
Pleasure, and get away from that parking lot and enjoy the day. Thank you, Ben. That's Ben in Tallahassee, and we were going through the Dow. Now, there are a couple of things here. If you look at STZ, remember about a year ago, I was looking at STZ and I said, this is incredible. For the past umpteen years, STZ, which is Constellation Brands, could do no wrong. When you heard the CEO interviewed, he was talking about, he was so ahead of the game. He would be making craft beer when people were just thinking about it. He was doing everything. And a big company like this, you say to yourself, wow, how can he? The little guys move quickly. How does he move so quickly? He was just doing the right thing at the right time. And I spoke about a year, now it's probably a year and a half ago. I think it was at the end of 2017. I gave a talk, and I said I was invited to give a talk to one of the big associations, and I'm there, and one guy says, "Hey, how about STZ?" I said, "STZ, I think we're really close to some kind of a pullback." Oh no, it was October. It was October, and I said, "I think we're in for a pullback." He said, "I've been in this thing," and he said, like, I don't know how many years. He's been in it, and all he does is every time it pulls back, he adds to it. I said, well, I'm not going to change your technique. That's fantastic. But I do think we're in for one of its deeper consolidations coming up. Well, lo and behold, STZ in October of 2016 goes from 173.55, has a whopper of a pullback, and goes down to 144. So it goes from the 173 area to 144, 30 points for that stock. That's 6% pullback, right? Or is it not even 20%? Yeah. Anyway, that's his biggest pullback. Has two bars, almost the same in December and January of 2016. Go, it was 16, going to 2017, and then it starts another move. It doesn't even close under the 14-period moving average. It does under the 9. And then it starts to move, and it goes to what? 100 points high. It goes to 236.62. We're right there, the month of May of 2018. And I'm looking at this, and I'm saying, unbelievable. Then it makes a kind of a double top, a U-shaped pattern. It goes to 234.26, just 2 points lower. And then it gives it back. And then it plummets to 150. I say plummets because this stock has never had a plummet. And it plummets from 236 to 150. So I would call that certainly one of its biggest declines on a point basis, absolutely, on a percentage basis as well. And now what is it doing? It could do no wrong. Well, what did they do? Was it last year, I think, they bought CGC. They took a big position in one of the medical marijuana companies. And now you can see that it isn't like, I know that the They just opened here in Brookline, Massachusetts, town next to me, between Boston and Newton is Brookline. They opened up a store and everything. I was away the weekend, but everything went quite well. But they are just, I don't know how much they're going to make in the first 2 weeks. It'll be absolutely unbelievable. Of course, Brookline will be getting taxes on that. So that's a good way to do it, because for Brookline, I guess. But SDZ, there's a lot going on. They're going to have to deal with this in another way. So Constellation Brands, I'll get back to a position that you might want to take in a moment, but I just want to get the surrounding effects.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So just in terms of Constellation brands, GWPH, that's GW Pharmaceuticals, same thing. I think it's a British company in the medical marijuana or cannabis area. My preference has been from some subscribers is we've got the MJ, and we'll probably add to it on a pullback. I'm just going to say, if you look at the characteristic, there's another H pattern here. It's trading 166.20 and GWPH down to 63. Give it just a couple more days, and then you might want to be nibbling, not even making lower lows. I would let it pull back, and then on the first bounce, I'd assess that bounce based on the MACD and the stochastic. So the question was, Greg, SDZ, what did you say? Morning, Basil, would you look at SDZ for me? I'm not in, but like the way it has pulled back, what do you think? What would be a good entry? Thanks, Greg. So, Greg, if you want to start position playing here, because I think it's trying to form an important base, SDZ, it might take more time. As I'm saying to you, it's costing them a lot to get into these products. When they get the payback, because they've got their regular business, in this case, spirits, now they've added this other area. They're not experts in the other area. They'll become, but not yet. Looking out, I can see this going to 190 over the next few months from the 167 area. I'm just going to say to you, I would prefer for it to have a pullback, but at 167, you could give it a 5-point stop. Maybe the low of the day today is 166. It's trading 167. No big deal. I'd prefer to see it under 166, and then I would start thinking about a position. I'd actually be watching it. I try to play it that if I saw a green candle after this red one, that's where I might want to enter. But if I'm seeing red candles, I'd probably wait until I get that green candle. And even then, that might not be the low, but there's really important 163 support. So I'm saying in the 166 area with a 5-point stop, I think you're going to be good. That's the way I would do it. Or you're going to have to just wait for strength. I'd actually personally want to rather buy strength than weakness, but starting your position on weakness, knowing that this is a stock that you want, at 160, maybe a point or two lower. That's where I start. Folks, Basil Chapman, I've got a webinar for subscribers. You can become a subscriber. We're going to the front page of TFNN. I think it's going to be an important webinar a week from Wednesday. Anything goes. I'm talking about politics, saying what you want, doing what you want, as long as it fits within a category. And we'll be looking at what's going to work, I think, and what isn't going to work. I'll be back tomorrow. Have a great day.